Now let us have a look at the evening star. We have looked at the morning star when we looked at the bullish patterns. Now the evening star is just the opposite of a morning star. So let's go through the basics. So it's a 3-candle bearish pattern. So it's a 3-candle bearish pattern. First candle is a long white real body. This first candle ideally should be a long white real body. Second candle is a spinning top, small real body that ideally gaps away from the first candle. So this second candle should be a spinning top or a small real body. The bodies should not touch. If the shadows are touching, that is fine, but the bodies of these two candles should not touch. So that makes it a star, which represents indecision. The third candle is a long black real body that closes deeply into the first candle. So this third candle, ideally the second and the third candle should not touch. The third candle is a candle which closes below the midway point of the first long white real body. Okay? So, and third candle must preferably gap away from the second candle, which is the bodies should not touch. If the shadows are touching, that is fine, but the bodies should not touch. And it must come after an uptrend. Okay? So all of the conditions of a morning star, if you just take them and flip them around, you have an evening star. So that becomes your entry point and that becomes your resistance area. Slightly above that, we keep our stop loss. Okay? So all of the conditions that we looked at for a morning star, all of them are applicable here, just in the reverse. So let's quickly have a look at a practical example of how an evening star looks like. Now this is an intraday chart. This is 15-minute chart of Siemens. So you have a nice uptrend. So the first condition is satisfied. Second, you have an evening star here. First candle is a long white real body. Although I would have wanted this candle to be more longer than it is right now, at least of this length. Okay? But nonetheless, it's a tall white real body. Then you have a small indecision candle, which represents confusion in the market or which breaks the prior trend. And the third candle is closing not just below the midway point of the prior white candle, but even below the opening of the prior white candle. So, and the shadows do not matter, by the way, in the evening star. It's just that the bodies should not touch. In this case, this is a variation of an evening star. It is not a perfect evening star because the second body is touching both the first and the third bodies. Okay? So that's an evening star. Notice here that you have a shooting star here. This single candle that is creating resistance. And that resistance is respected by this evening star, which is an even more positive sign that the trend is likely to reverse. So I can take an entry here, keep my stop loss here for this much risk, and we can expect the price to reach that support. What is this candle? That's a hammer. Okay. What is this pattern? These two. That's a bullish engulfing pattern. What is this? What are these three candles creating? That's a morning star. So you see how many patterns you see just in one small 3-candle pattern. Okay. Similarly, you have the evening star, and you can expect the prices to go down from here, which is what happened. Okay. All right. Now let us have a look at the different types of evening stars. So let me reiterate the conditions of an evening star. It comes after an uptrend. The first candle is a tall white real body. The second candle is a spinning top or a small real body. It can be black or white, it doesn't matter. But it should gap away from the first white real body. The third candle should be a tall black real body, which closes below the midway point of the first white real body. And ideally the second and the third candle bodies should not touch. The shadows, if they are touching, that is fine. The bodies should not touch. Okay? So this becomes our entry point. That becomes our stop loss. So that's the evening star pattern. Very powerful pattern because there is an indecision candle in between. I would say it is even more powerful than the traditional bearish engulfing pattern. So what is the difference between this pattern and this pattern? It's just that the second candle is white and black. Okay? But both of them are evening stars. What is the difference between this pattern and this pattern? In this case, the second and the third bodies are not touching, which is ideally what we want. In this case, the second and the third candle are touching, and probably the first and the second are also touching. Okay? So that's that's the difference between these two patterns. If we look at these two patterns, it's just that the middle candle is, the color of the middle candle is different. Have a look at this. What is the difference between this pattern and this pattern? In this case, the black real body opens slightly below, so it is not touching. Okay? If you look at all of these 6 patterns, there are minor differences in all of them, but as long as all of them are coming after an uptrend, even if it's a short-term uptrend, that is fine. They are all evening star patterns. So they look different, but they perform the same function. The most important thing I look for is the close of the third candle. Is that below the midway point of the first white real body? And the least important is the shadows themselves. Here we are talking about real bodies. We are not talking about shadows here. Okay? So let's quickly have a look at another example. So this is the daily time frame chart of Sikla. So you have a nice uptrend, very strong uptrend because it's a daily time frame chart. It's a steep uptrend. So first you have a tall white real body. This is also something called as a belt hold line. The reference for this comes from the book Japanese Candlesticks Charting Techniques, written by my coach, Mr. Steve Nason. So that's a tall white candle. Then the second candle, which is a star, which is an indecision candle. The shape of the real bodies will give you a hint that the prior trend is likely to end. So, and the third candle, although it is touching the second candle, it is closing deeply into the first candle, which is the tall white real body. So that completes our evening star pattern. If you carefully observe these two candles, the second and the third, they are also completing what we discussed before, that is the bearish engulfing pattern. The tall black real body engulfing the prior white real body. So you have two patterns in one, which is the evening star and the bearish engulfing pattern. So you can keep your entry point here. That would be your stop loss just above the high of the evening star pattern. The highest high of the 3 candles becomes our resistance. So that's our risk. So that is support 1, which is a bad reward to risk trade. That is support 2, which is a good reward to risk trade. If we look at support 2, assuming that this support was not there, then you have a nice trade there, which is 2:1. So in this case, all the supports were taken out. This one, then this one. And I think this support has also been broken slightly. Okay? So that's the power of the evening star pattern. In spite of the fact that it is not confirming any prior resistance, you still have such a huge downtrend from that pattern because it represents a shift in psychology. Okay? So the bulls are in charge, then suddenly there is indecision, and then you have the tall black real body. Okay? Alright, now let us have a look at the difference between the normal and the classic evening star pattern. So look at these two patterns. Assume both are coming after an uptrend. What I like about this pattern is that the first and the second candle real bodies are not touching, and the second and the third candle real bodies are not touching, which is the ideal scenario we would want in an evening star, which is not happening here. The first and the second candle are touching each other, and so is the case with the second and the third candle. So that's a normal evening star. That's a classic evening star. Okay? So in this case, look at, this is a classic evening star. Okay? So there is a huge gap up opening, and the bulls are happy by the time this candle is opening, by the time the candle has opened. But when the candle closes, they realize that there is some problem in the market. Okay? So if the bulls were so powerful, why is this a small real body? So that is why the gap up opening is very important, and the gap down opening further reiterates that the problem was caused by the bears in the market. So that's a classic evening star pattern. So on a daily time frame chart of ICICI. So if you keep your entry here, that would be your stop loss for this much amount of risk, and you can aim for the support level here, which is created by the rising window. So the entire window becomes a support zone. So if I call this S1, that is our entry point, and that is our stop loss. So in spite of the fact that this is not confirming any prior, in spite of the fact that it's not confirming any prior resistance, it has still resulted in a strong downtrend. Now, our stop loss would have been hit here, which is the reason why we must always trade with a stop loss. However, if you notice carefully, these candles, these two candles are respecting the resistance created by the evening star. Okay, so there was another shorting opportunity here. I would not have done that here. Probably I would have done that here because these two candles are respecting the resistance created by the powerful evening star. Okay? So this goes to show that even if our stop loss gets hit, but the trend that is forecasted by the evening star is still intact. Okay? So remember, do not trade without a stop loss. No matter how powerful candlestick patterns are, you will always get one or two odd candles like this, which might try to break above that resistance point, and they might fail to do so, but in the process, they might take out your stops. Okay? So it is always preferable that I look at an evening star that is confirming prior resistance. That is my style of trading. Okay? And by the way, it has, before even this happened, do you notice that before the stop loss was hit, probably your profit target was also hit here. Okay? So if I keep my profit target just above this support zone, because my support zone is where the bulls are sitting. So, and that's exactly what happened. So I keep my profit target just above the support line. Probably my profit target has been hit before this candle came. When it comes to keeping stop loss, I keep it beyond resistance. But when it comes to keeping a profit target, I prefer to keep it just above support, because before even it goes to test the support, I'm out of the market. Okay? That is a technique that I learned from my coach, Mr. Andrew Mitchum from the Forex Trading Coach. So, cool little ideas here. So, that's how I look at an evening star. Okay? Alright, now let us have a look at the psychology behind how the evening star pattern becomes a resistance and why it results in a downtrend in prices. Remember, the reversal pattern does not mean that the trend will reverse. It just means that the prior trend will be ending. Okay? So, first candle is a tall white real body which indicates a very strong bullish momentum. So the bulls are very happy. On the second candle, you have On the second candle, you have a spinning top. So at the opening, the bulls are happy. But by the time the market closes, the bulls are in doubt. And suddenly on the third candle, you have this tall black real body, which has made the bulls completely nervous, and it has made the bears very confident that the market has turned, because you have bullish momentum, then indecision, and a strong bearish momentum, which results in the prices going down. So you can see the shift in psychology here, which is happening. If it's a black candle, it's even better. Okay? So that's the psychology behind why a evening star is so important and a pattern that cannot be ignored. So this is a daily chart of BPCL, a very steep uptrend, and you have an evening star here. Is that a classic evening star? No, because the second and the third candles are touching each other. So if I draw a resistance line here, I keep my stop loss somewhere above this. That's the close of the black candle is our entry point. So we have this much risk in the trade, and probably that's the hammer. Probably it's coming after a downtrend, so that becomes our support, which is respected by these two candles. So if I keep my profit target just above that, because the market can just test it and go back, so I can keep my profit target just there. So it's a nice 3:1 or 2.5:1 reward to risk trade, which in this case has worked out fine. So probably if I would have taken a trade here, I might have exited at this bullish engulfing pattern or at this morning star. Okay, so you got two signals to exit the market. You did not have to wait till the price reached that. So in this way, the knowledge of candlesticks allows us not only to enter the markets, we can also choose our exit points when we look at patterns like this or this, which we have already studied in great detail. If I know that the morning star is a bullish pattern, why would I remain in a trade on which I have taken a short position? If I am short, I must be out here, because from here the market has ascended from here. So that's a perfect exit point for me. Even this was a very good exit point for me because it's a bullish engulfing pattern. Okay? Alright, now let us have a look at the strength of the evening star patterns. So we have looked at this slide before. All of these patterns are evening star patterns provided they come after an uptrend. As you remember, I mentioned before, my coach Steve Nissen says that the prior trend is as important as the candlestick pattern itself. And the market context is also very important when we look at a candlestick pattern. Just because it's a candlestick pattern does not mean that I will take that trade. It depends on where it is appearing on the market. So you can't have a cheat sheet for Japanese candlesticks. Japanese candlesticks are not so easy to be made, to be having a cheat sheet on that. Yes, we can have a cheat sheet for just to see the patterns, the shape of the patterns. But before pulling the trigger, we have to look at the context, to where exactly that candlestick pattern is appearing. So if this were a perfect evening star or a classic evening star, and if this were a normal evening star, does that mean that I always take that trade relative to this pattern? No. What if this candle is confirming prior resistance and this candlestick pattern is not confirming prior resistance? In that case, I would give more weightage to this evening star than a classic evening star. Okay? I have discussed this multiple times. So patterns which look like very perfect does not necessarily mean that I will take a trade on that pattern. Okay? So now let's look at this chart. This is a daily chart of Siemens. So what do we have here? Okay, so now this is an unusual pattern. So you have a nice uptrend that started from here. So you have this pattern here, tall white candle, which tells us that the bulls are very strong on this candle. And suddenly you have a small real body, the indecision candle. And you have the third black real body, third candle, which is a black real body closing well below the midway of the first tall white candle. So although the opening has not been somewhere here, it's not something like this, but the opening itself has been way down. So it's like an invisible black candle here. We can't see that here because the opening itself has been down. So which is even more powerful, which indicates even more bearishness in the market. So imagine if the opening were here, the bulls are still happy, right? Because the bulls are still in profit. Those who bought here are happy here. They are happy on this candle because they are still in profit. And if the opening happens somewhere here, they are still in profit. So they are happy. What about the opening if it happens here? Then they are seriously thinking of getting out of the market. So the opening itself is giving us a very strong signal. Okay. So in this case, the closing has been below the midway point of the first tall white candle. So it satisfies the condition of being an evening star. That is one point. Second, you look at these three candles here. Is that an evening star? Probably, because it is near the midway of the first candle. It has not decisively closed below as we see here. So I wouldn't call it as a perfect evening star, but it looks like if we measure it, probably it has closed below the midway point. But nonetheless, this is where the downtrend started. So I'm not bothered whether this is an evening star or not. What I'm really interested in is this point. This is where the trend started. So if I draw a resistance line here, look at the precision of the candlestick patterns. I have been telling this multiple times. The market has a memory. This occurred on the second week of May, and this happened on the first week of August. So half of May, June, July, and beginning of August. So after 2.5 months, the market touches that level and falls back down after the same level. So this is very powerful. The evening star pattern confirming prior clearly established resistance. So, and I think it gives us a good reward to risk trade. If I take an entry here, keep my stop loss above this resistance line, and we aim for this target, that's a nice 2:1 reward to risk trade. I think it is more than 2:1. So in this case has worked out fine. Probably it just touched. No, it has not achieved that target, but if I consider this as a hammer, I wouldn't be confident calling it as a hammer, but if I measure this lower shadow, if it is more than twice the height of the real body, then it is a hammer. Only thing that makes me uncomfortable is the upper shadow of this candle. But the fact that it has bounced at this level gives me some caution that maybe it's better to exit here at the close of this particular white candle. Okay? Right. Now let us have a look at the special evening star pattern. Just by looking at this pattern, you would understand why I call it special, because the second candle is a doji candle. A doji candle is a candle which does not have any real body. It represents confusion in the market. It represents that the market is in equilibrium. It represents that the power of bulls and the power of bears are the same. And we don't know what is going to happen next. Okay? So that's the special evening star. It's even more powerful than a normal or a classic evening star. Of course, it's a classic evening star in itself, but this candle makes it very special. Okay? So Let's have an example. This is not a perfect doji, but given the fact that it is coming on a daily time frame, so not much movement between the open and the close on that daily time frame. That's why I have taken that example. So you have an evening star here. Although I would have liked the white candle to be longer and the black candle to be also a bit longer. But in this case, since the middle candle is that doji-like candle, I'm comfortable calling it as an evening star. And even though it's not confirming any prior resistance, still that evening star has resulted in a steep downtrend in the market. So if I were to take an entry here as an aggressive trader, first of all, as a conservative trader, I would not take this trade unless it is confirming some prior resistance. So I'll have to go back and see what's happening. So that would be the entry for me as an aggressive trader. That would be my stop loss. Just about the highest high of the three candles comprising the evening star, and that would be my reward. So it's a very good trade, 4:1 maybe, reward to risk. Another thing to notice is that this 400 level, whenever the price has tried to cross that level, these three candles could not close above that level. This candle closed, but the bulls could not sustain that momentum above the 400 level. And we know that whenever the bulls break above a critical point, which is a round number, a psychologically important number, whenever the bulls do that and then fail to hold their ground, and the bears push the price back below that resistance point, that's a very powerful bearish sign, okay, because the bulls have failed to hold their ground. So in this case, this target was achieved, okay? Alright, now let us have a look at patterns which are not evening star patterns. So in this case, first of all, the real bodies are touching, so that doesn't make it a classic evening star. Secondly, the black candle has not closed below the midway of the prior long white candle. So that's a problem with this. It's not an evening star. What is the problem with this? All the three bodies are not touching each other. That is great. The close of the black candle is well below the midway point. That is great. But why would I not call this a evening star? The reason is that you need a tall white candle. See, we need to see nice bullish momentum after this uptrend. And we want that bullish momentum to be broken with two candles. One is the indecision and second is the decisive break under that midway point of the prior long white candle. So I would have wanted this candle to be like this. Long white candle, then this is closing below the midway point of that long white candle. So that would be an evening star for me. But if you look at this, that's not an evening star for me. That's not an evening star for me. So we need tall candles, first and the third one. Okay, so let's quickly have a look at an example. Now, see, this is not an evening star because the second real body has opened within the prior tall white candle. So these two candles, if we see it, it's another pattern which we are not discussing in this video and which is not in the scope of this level 1 training program. It's a different pattern. It has a different name, but definitely it's not an evening star because ideally we would want the second candle to be a star. A star is something which is a small spinning top that gaps away from the prior white long real body. So that's why I don't call this as an evening star, although it looks very bearish. If we look at these three candles, it looks very, very bearish. And aggressive traders might be tempted to take that trade. Also, it is confirming this resistance point, which coincides with a very powerful round number. So there are many factors coming together here. And the trade has worked out fine. It has gone down, but I wouldn't have taken this short position saying that this is an evening star. No. irrespective of what happened next, I wouldn't take that trade, because that is not an evening star. That's a different pattern. These two candles are a different. There is a different name for that pattern. But there are certain conditions for an evening star which are not satisfied here. So that is why I wouldn't have taken that trade. Even if, in hindsight, if I would have taken the trade, I would have made a lot of money here. But no, I wouldn't do that strictly as a conservative trader unless I have a documented pattern which I know has a higher probability of working. I wouldn't take that trade. So it's a daily chart of Nifty, and that's not an evening star, okay? Right, let's have a look at this chart. This is an intraday chart of Mindtree. It's a 10-minute time frame chart. We are looking at multiple time frames, multiple asset classes here. So is this an evening star pattern? So it's a nice uptrend. Probably which started after this hammer. So probably there was a downtrend. Then you have the hammer and the uptrend started. And you look at these three candles. So the first condition, which is uptrend, that is satisfied for the evening star. Second condition, it's a tall white real body, which is also satisfied for the evening star. Second is the star which is touching the first white real body. That's okay. That's not a problem. We can call it a normal evening star. But the problem is the third candle. This is not closed below the midway point of the prior tall white candle, which is why I would not call this an evening star. Irrespective of what happens next, even if the price goes down, I don't care. I don't want those profits. The fact that it is not an evening star, I wouldn't bother taking this trade. Okay? So in this case, indeed, the resistance has held. There is not a single candle from here till here which has either crossed or closed above that resistance point. Remember the difference between crossing and closing? So if this candle crosses like this and closes back, that's called a cross. It has crossed but not closed. But what if this candle goes up and closes above that resistance? That's called as a proper close above that resistance. So although this trade has worked out, but you see it's a flat market. Normally in an evening star, you would expect the market to go down. Okay? So that is not an evening star for me. I wouldn't take that trade. Right, now let us have a look at the power of an evening star pattern. Okay, so the evening star pattern is a very powerful bearish sign. We have already looked at multiple examples of that. Let's have a interesting example here, because I like to show you higher time frame charts. So this is a monthly chart of NHPC. So a nice uptrend you see here. Although on this chart the trend looks small, but when you look at the time frame, we are talking about how many months here? Almost 8 to 9 months. So these three candles might look small to you. You might say, Rohit, these are not tall candles. However, when you look at the monthly time frame, that's an important pattern to look into. It is not a perfect evening star because the star in that pattern is touching both the bodies. So I wouldn't call it an evening star, but I would be taking a minor position in such kind of situations because it is coming on a monthly time frame. The reason why I would take a minor position and not a major position is because it's not confirming any prior resistance. So if I were to take this trade, the short position would be like this. That would be the risk and that would be the reward. So it's a nice 2-to-1 trade. Nice 2:1 reward to risk trade on an evening star that does not confirm prior resistance. And the reason why I took the monthly time frame because I wanted to show you the power of that evening star. Okay. Now in this case, my stop loss was hit However, none of these two candles has been able to close above that resistance created by the evening star. They have crossed but not closed. So I probably would have, this position would have hit a stop loss. But if the shooting star were there, which fails to close above that resistance, that's a sign that the market is going down, which is exactly what happened. Okay. So I would have probably taken that trade on the shooting star because it is confirming prior resistance. The reason why I keep saying that I need prior confirmation of resistance is because what happens here? Because if this evening star is a very powerful evening star because it is coming on a monthly time frame. So it's a 1 month. The bears took 1 month to prove their mettle. So it's a powerful pattern on a monthly time frame, higher time frame. However, if it is not confirming resistance, there is always that risk. So that is another reason why we must trade always with a stop loss. Never trade without a stop loss. That is the basic rule of professional trading. We are not talking about amateur trading here. We are talking about professional trading here. So the shooting star would be more powerful than the evening star because it is confirming prior resistance. And if you look at this dark cloud cover, I wouldn't call it a dark cloud cover because dark cloud cover requires a nice uptrend. But nevertheless, this candle failed to close above the resistance. Forget about closing as it has not even crossed it. Okay, so that shooting star has become a very powerful resistance. My stop loss would have been somewhere here. So, but nonetheless, our objective was to show the power of the evening star pattern. So this evening star still holds as resistance. In spite of the fact that they have crossed, they have not closed above that. And if you look at this area, all of these candles, there is not a single candle which has closed above the resistance created by the evening star. And each of these candles is a monthly chart. So we are talking 2.5 years here. So that goes to show how powerful this pattern is, how powerful that resistance is. Okay. Now let us have a look at the evening star pattern as a resistance. Okay. So we have looked at these kind of examples before multiple times when we studied other bearish patterns. So the highest high of the evening star pattern becomes resistance. So let's look at these two evening stars. In this case, the second candle's high is the highest high of the three candles. In this case, the third candle's high is the highest high of the three candles. Whatever is the highest high of the three candles becomes our resistance point. So I keep my stop loss above that. So the purpose of this video is to show you how the evening star pattern can become very strong resistance. We have already looked at this in the previous example. I want to reiterate that for you. So this is a daily chart of our reality. This is an evening star pattern. We are looking at it as a resistance. So there is a nice uptrend here on a daily chart. And you have an evening star. Now, it's not a perfect evening star because, see, it's a star. Because it has gapped away from the white real body. But it's a variation of an evening star because ideally this should have opened below the opening of the second candle. So in that case, I would not call it a classic evening star. But if you look at the closing, it is well below the midway point of the first white long candle. Okay. So that's why I call it as a variation of an evening star, number one. Number two, these two candles are completing a bearish engulfing pattern. That's very simple and it's a classic bearish engulfing pattern. Okay. Number three, this evening star is confirming the resistance created by the dark cloud cover here. The reason why I call this as a variation of a dark cloud cover is that in this case, the opening has not been above the high of the prior white candle. So it is a dark cloud cover. So this is our resistance. Let's call it R1. So let's say this is R1, and now the resistance created by the evening star, let's call it R2. So we have a zone here, okay? So we have a resistance zone here, and the price is less likely to break that zone. So we want to see whether the high of the evening star becomes resistance or not. Look at the precision of Japanese candlesticks. Tell me whether any one of these two candles have they even crossed or closed above the evening star's resistance. Have a look at this candle. Look at the precision of candlestick signals. The evening star's pattern's resistance is so strong that these candles have not been able to either cross or break or close above that resistance point. And you have a zone here. Okay, so this purple dotted line itself was so powerful, the price never had to go beyond that purple line and test the resistance created by this variation of a dark cloud cover. Okay, so remember the highest high of the three candles comprising the evening star becomes a very strong resistance. Alright, now let us have a look at this chart of ONGC 15 minutes. This is an evening star. So I wanted to show you an intraday chart. So you have a nice support formation here, piercing pattern here. Price went up. Look how many consecutive white candles. 1, 2, 3, 4, 5, 6, 7 white candles consecutively. Then you have the evening star pattern. Not a perfect one, but still an evening star pattern. You have a shooting star pattern here. I think this one also can qualify as a shooting star if we count, if the upper shadow is more than twice the height of the real body. Can also be called as a shooting star, but this is a more accurate shooting star. It's coming after a steep uptrend. But these three candles are a evening star, okay? And we can expect the prices to come down here. So that would be our entry point. The highest high, which is this one, would be our risk. And this one and this one, that would be our support zone. So that's a support zone. So our profit target will be somewhere here. Entry will be at the close of the evening star pattern, and the stop loss will be somewhere here. So I think it's 2:1. No, I don't think it's 2:1. It's less than 2:1. Little bit less than 2:1. So I wouldn't take this trade. If I need at least 2:1. So if I measure it, probably I'll have to do an exact measurement to see whether it comes as 2:1. But in this case, see, the target has been achieved on this candle. It's a 15-minute chart, so you don't have to wait a long time to achieve that target. Another way to exit was this candle, which is a hammer. Okay, a classic looking hammer, because there is no real body at all. So something like a dragonfly doji. I think we have discussed this in the course on hammer. So since it has bounced or at this support level, there is a reason for caution here. Maybe the price would have gone up from here. But thankfully it kept going down because the resistance created by this bearish engulfing pattern was very strong. Okay? Alright, so now let us look at the entry and stop loss. Let's bring our attention to that. So entry is at the close of the black candle. Stop loss is at the highest high of the three candles, which we have discussed before. So that becomes our risk. It always will be this way. Okay? So the highest high of the three candles will become our stop resistance. Just above that resistance, I would keep the stop loss. And the close of the evening star pattern becomes our entry point. Remember, you have to wait for a close. Okay? So now you have a nice uptrend here. This is a daily chart of Tech Mahindra. We are looking at an evening star. So nice evening star here. Bullish candle, then indecision, and a strong bearish candle. all coming after an uptrend. So nice looking evening star here. Only problem is that it is a low risk. Sorry, it's a high risk, low probability, aggressive trade because it is not confirming prior resistance. So let's say this is our entry point. Just above the high of the evening star, we keep our stop loss. And what is our support? Maybe this one? Yeah, this one we can take as support. This one is not much of a support because there's no trend. So, and this one is definitely a support. So we have a zone here. That's a support zone. So we call this S1. We call this S2. And our profit target will be somewhere above the S1. So this is our reward. That's our risk. I would probably not take this trade as a conservative trader, but as an aggressive trader, if you are aggressive in your trading, you want to ride it, you want to ride this bearish momentum down, and if you are willing to accept that risk psychologically, then you can take that trade. Okay? So that's a steep downfall in price. This is music for people who have taken short positions. Okay? Right. Now let us have a look at setting profit targets with the evening star. I have already covered multiple examples, but let us bring it into focus here. I have marked these lines for you. Okay? So nice uptrend which starts after a, what is this pattern? Bullish engulfing pattern. So nice uptrend that starts after a bullish engulfing pattern. So the lowest low of the bullish engulfing pattern becomes support area. Coincidentally, that support area matches with 450 level, which is a round number, psychologically important number. And you have problem near 500 level now. Okay? So you have an evening star. The evening star, the high of the evening star becomes resistance. So above the high, you can keep the stop loss. So that was our risk. That's our reward. Probably not 2:1, but if you were to take that trade as an aggressive trader, you would probably see what happens at that particular price. Okay? So that's how you set reward to risk trades on evening star. Now it's a very long black candle. It's not a perfect evening star because the star is touching the first real body. Okay? But nonetheless, it's a nice trade setup except for that reward to risk. This is a hammer. Okay, so probably you should have been out at this candle. Okay, you did not have to wait for the price to go up and then fall back again and then take your target. That would take too many days. This is a daily chart of LIC Housing Finance. Okay, so the candlestick signals not only allow us to see where we can take entries, but also they pinpoint exact exit points as well. Alright, now let us bring our focus to reward to risk. Okay, so there is an uptrend that starts here. How many white candles in a row? 1, 2, 3, 4, 5, 6. 6 white candles in a row. After that, you have an evening star. Not a perfect evening star because the second and the third real bodies are touching each other. So the market has been making higher highs for around 5 to 6 candles in a row. It's a daily chart of DLF. So I have marked the risk and reward positions for you. So that's our entry. That's our stop loss just above the high of the 3 candles, which is the high of the evening star. So that would be our risk. That would be our reward, assuming this is a nice support area. So I think it's a 2:1 reward to risk trade. The only thing is it's a high risk, low probability, aggressive trade because it is not confirming any prior resistance. So in this case, this was a candle that tried to cross the resistance of the evening star but failed to do so. Now this is a very good chart to show you that a trend reversal pattern does not mean that the trend is completely going from up to down. My coach Steve Nissen in his book Japanese Candlesticks Charting Techniques says that the trend reversal pattern does not mean that the trend will go immediately from up to down. It can even go from up to neutral, which is what happened in this case. It consolidated for a while and then it started to go down. Okay? So this target was not achieved, but these small candles would have given us enough clue that probably the bulls are sitting there. The bulls are not allowing the price to break that support level. Okay, so that was probably a good time to take an exit from the market. Okay. Alright, now let's have a look at our old model, the standalone evening star pattern. Evening star that does not confirm prior resistance is a low probability risky trade, and it is also an aggressive trade. Okay, so we have a currency chart. This is monthly chart of USD INR, the dollar Indian rupee. Evening star becoming very strong resistance. So you have a nice uptrend, then an evening star. We want to see whether this evening star becomes a resistance or not. It's not confirming any prior resistance, but here we are illustrating that the evening star becomes resistance. Now, don't get fooled by this, that because the price has broken the resistance, but just focus here. It's a monthly chart, okay? So each candle represents 1 month's worth of price action. This is a evening star, but not a classic evening star because the second and the third bodies are touching. I would also prefer that this white candle would have been a bit smaller than what it is now. And these two candles are completing the bearish engulfing pattern also. So you have two signals in one 3-candle pattern. So this resistance, the high of the evening star has held till this candle. Now this might seem that okay, it did not hold, but if you look at the time frame, each of these candles is a monthly candle. So we are talking about somewhere between April of 2016 till August of 2018. So almost 2.5 years, this high has held as resistance. So it's a very important chart to look at, very important chart to analyze, because it's a monthly chart. It gives us an early warning that the price, whatever happens to the price, there is a very low chance that it will cross this purple dotted line. So whatever you wanted to do, you could do below that line, but the chances were very low it would cross that line, and it did so for more than 2.5 years. And finally it took a very long candle to break that resistance. This candle crossed it, but could not break and close above it. This is a doji candle, which again got stuck. Understand, this is a monthly candle. It looks very small, but this is 1 month worth of price action. What are these two patterns here? Bullish engulfing pattern. This one and this one. In fact, this bullish engulfing pattern is confirming the support created by this bullish engulfing pattern, after which the price went up aggressively. Okay? Then what do you have here? This is a bearish engulfing pattern, after which the price has started to fall down. Okay? So the evening star pattern becomes very strong resistance. However, this is standalone evening star. So it's a high risk, low probability, aggressive trade. Okay? Alright, now let us have a look at a conservative trade, my style of a trade. Okay? So evening star pattern confirming prior resistance. That is what I like. The evening star pattern, evening star pattern confirming prior resistance is a very strong bearish sign. So we know what has happened at that price previously on that chart. So that is why I would prefer an evening star pattern confirming a prior resistance. So you have the daily chart of Eicher Motors. This is a highly priced stock. So you have an uptrend. Then you have an evening star here, a purple dotted line marking the resistance created by this dark cloud cover. What is this pattern? This is a nice dark cloud cover. The close is below the midway of the prior long white candle and the open is above the high of the prior long white candle. So we know that the highest high of the dark cloud cover candles becomes a resistance. So we have drawn a purple dotted line. And then you have an evening star that confirms that resistance created by the dark cloud cover. So you have another resistance point. Okay. So you have a resistance zone here. So if I were to take a trade, I would keep my stop loss above that zone. I wouldn't keep it above the evening star pattern. I would keep it above that zone because it's not a big distance. So, and then I would expect the prices to go down from here. Okay. So the evening star pattern confirming prior resistance is a low risk, conservative, high probability trade. Okay. So look at what happens next. The price has gone nowhere near the resistance created by the dark cloud cover and the evening star. Okay. So evening star confirming resistance is my style of a trade. So now let's look at the evening star providing price confirmation. So we have discussed this before that an evening star, if it does not provide resistance confirmation, then at least we should have price confirmation. So the evening star pattern with price confirmation is an even more bearish sign. So let's have a look at an example here. So this is a daily chart of Bharti Airtel, a nice uptrend pointed by the blue arrow. You want to look at the evening star with price confirmation. So this oval dotted oval marks an evening star. Okay, very nice evening star there. The black candle is very aggressive. But the problem is not confirming any prior resistance. Yeah, this is a resistance, fine, but it's above that. I would not see, because this is not resistance. If this candle would have been like this, probably I would say, okay, it's confirming prior resistance. But I wouldn't say that this is exactly confirming that resistance. I wouldn't be confident in saying that. Since I would not be confident in saying that this has respected that resistance, I would wait for one more day. What does it matter? It's just one day. So I wait for another day and I see whether the candle closes below the evening star, which has happened. So instead of taking a short position here, I take a short position here. So, and I expect the price to go down from there. The only thing is which we have discussed multiple times with the price confirmation is you are selling at a more lower price. So your reward to risk ratio goes down. So that is the only cost that comes with increasing the probability of that trade. If we wait for a price confirmation, then we have to sacrifice on the reward to risk. But that sacrifice is worth it because you see how the trend has gone down aggressively. So it is worth waiting for price confirmation when you don't have prior resistance confirmation. Okay. Alright, now let us have a look at our good old model. If I have an evening star which is not confirming prior resistance, that is a low probability trade. If it provides prior resistance confirmation, then it's a medium probability trade. If it provides a resistance and price confirmation, it's a high probability trade. But remember, the high probability comes at a cost for the price confirmation, and that cost is reduced reward to risk ratio. Okay. So let's quickly have a look at an example. So this is HDFC Bank daily chart. Okay. Now it's nice uptrend here. This is morning star here. This is a short-term downtrend, so I would be uncomfortable calling that a morning star, but it looks very good. It looks like an ideal morning star. But anyways, from that pattern, the price has went up. So you have a shooting star here. So I draw a resistance line. And the price consolidates and comes back up again. So you have a evening star. I think that's a classic evening star, okay, which is confirming the resistance created by that shooting star. I think that's a classic shooting star. So very powerful sign, okay. So we are looking at this second leg, which is the resistance confirmation. Remember, multiple times I have said this. This is the most basic way of trading the candlestick patterns. We are not looking at some complicated indicators like stochastics or Bollinger's or RSI or moving averages or the zigzag lines on the charts. We are just looking at horizontal lines. This is the most basic way of trading the candlestick patterns correctly. Okay? If we combine this knowledge with other patterns, which is other Western indicators, that's even more powerful. So let's come back to this chart again. So that's our resistance, the evening star confirming prior resistance. We can take a trade here, keep our stop loss here for this much amount of risk. And then we can expect the price to go down. This is a minor support. That's a cause of concern, but this I think is a major support. So here you might see some consolidation in the price, but once that breaks, it will go here, okay? So see in this case, it has broken that support also. S2 has been broken. So evening star confirming prior resistance is my kind of a trade because we know what has happened at that price point in the past. So this is 1100. Probably 1100 is a very important psychological round number in the market. The bears don't want the price to cross that 1100 level. None of these candles here has closed above that 1100 level. It has crossed above that, this one and this one, but not closed. Remember, there is a difference between crossing and closing. We need a close above that level to confirm that that level has been broken. But 1100 still holds true for HDFC Bank in this case. And that's why the price has fallen down. Okay? Alright, quiz time. Okay, so this is a monthly chart of Graphite India. Would you take this trade? If yes, why? If no, why? So have a look at this chart, analyze it, look at this pattern, and let's come back and discuss this. Pause the video, okay? Alright, so we have a nice uptrend here on a monthly chart. So each candle represents 1 month. So it's a huge uptrend. The price has gone from almost, let's say 100 till 1000. So the price has gone up 10 times in this chart. So it doesn't look like the price has gone up 10 times, but it is actually. So first thing is the 1000 level. See, you can see the 1000 level. There is a problem here. So 1000 is a very important psychological round number for this chart, Graphite India monthly, ending with 3 zeros. Psychologically important level. This is like a shooting star, okay? Then you have this evening star on a monthly candle. The problem is it is not confirming any prior resistance area. Probably the price has not seen that. So it's like a new high. So you don't know what has happened in the past in terms of price. So this is an aggressive trade. It's a high risk trade. It's a low probability trade because you never know. The price has gone up so much. It might continue going up. Okay. So as an aggressive trader, I would take this trade. I would take an entry here. Stop loss would be above the high of the evening star, and I would expect the price to go down. But as a conservative trader, I would wait for the price to maybe pull back, then provide a pattern here and then ride it down, because we know that the 1000 level is a problem level. So as a conservative trader, I wouldn't take that trade. As an aggressive trader, definitely I would take that trade. But even if I take that trade, that would be a minor position, not a major position. Minor position, major position simply means you don't go and trade a bigger lot size or too many shares. You just test the market, you see what happens next, and then you add to your positions as the market develops or it gives you more signals. So, and probably you could wait for another month here to see whether it provides any price confirmation. If that happens, that is great. So in this case, the price confirmation never came, because the next month the price closed above the close of the evening star. However, you look at this line or you look at this 1000 level, there is not a single candle here which has closed above that 1000 level. It goes to reiterate how important that level was. Okay? So I, as a conservative trader, would not take this trade, because I am more comfortable with patterns which confirm prior resistance and support areas. Okay? Alright, quiz question. I see multiple signals on this chart. I want you to do that as well. So have a look at this chart, pause the video, analyze it. Let's come back and discuss it. Okay? Alright, let's see what's happening here. I see multiple signals here. Number one, it's a weekly time frame. Okay? And if you look at this, the price has gone from 75 to 150. It is almost doubled on this weekly chart. So it's a very strong uptrend. Okay? Now, you see the shooting star? That's our first signal. So let's mark it as 1. Okay? So now we know that the high of the shooting star becomes resistance. So I'd mark a line here and I say that it is R2. The reason why I say it is R2 is because this is R1. This is where the downfall has started. So let's mark this as R1, because the high of the shooting star is below the high of this candle. So that's R1. Let's call this R1. So now we have a zone here. Okay, resistance zone. So that is our second signal. The third signal is the shooting star. See, this is our third signal. That shooting star has been able to cross the zone but not been able to close above the zone. This white candle has been able to enter the zone but not been able to close above the zone. Okay? So that resistance zone is valid. So that's a shooting star. Fourth signal is the bearish engulfing pattern. These two candles are completing the bearish engulfing pattern with the black body completely engulfing the prior white real body. And the fifth signal is this three candles which are completing the evening star. Now for this, it's not a perfect evening star because the bodies are touching. I would have wanted this white candle to be longer than what it is right now, probably this much longer. Then I would have been more comfortable with this evening star. But nonetheless, based on the close of the black candle, this is an evening star which is appearing after a steep uptrend where the price has almost doubled. Now tell me, this is a weekly chart, okay? All of this is happening on a weekly basis. So that adds more weight to this. So if you have 5 such confirmations, then that gives you the confidence to take that trade. So the question is, where would you take your entry level? So if I would take an entry here, let's mark it E. Above the resistance zone, the shooting star has crossed, and shooting star is a resistance. So that becomes our R3, the high of the shooting star. So our zone has expanded. Okay? So I would keep my stop loss above that zone. That becomes my risk. and then I can aim for the prices to reach here. That would be my reward. So that's a nice trade. Look, we have taken so many confirmations here. We have not looked at volume. We have not looked at Bollinger Band, stochastics, RSI, no Western indicators. It's just simple horizontal lines we are looking at and the price levels we are looking at. Also the 150 level, you see there is some consolidation happening at 150 level. That's number 6. We have not even considered that. So that's a high confidence trade for me. And see, in this case, it has worked out. It never reached this level, but definitely it has played around with that level. So if I see consolidation happening, I go back and see, was there any consolidation at that same price point before? And indeed it was. So this was a nice time this entire month, because one candle is weekly. So you have 4 or 5 candles forming this support. Just the shape of the real bodies tell you that there is some problem here. The price is not willing to go down. So that was a nice time to exit. So your profit would have been from here till up to here. Okay.